Hi, I'm Kelly McGlinchey. I'm a CPA at Linkenheimer. I'm going to give you a brief update on the Paycheck Protection Program under the Small Business Administration guidance, and I'm going to give you a brief summary on the main tax and book treatments for PPP loan proceeds and covered costs. You may have received funds from the first round of PPP loans that started being issued back in March of 2020. If so, you probably have already applied for forgiveness or in the process of applying for forgiveness. You're eligible to receive full forgiveness as long as you have spent 60% or more of the proceeds on payroll or payroll related costs, and the remaining proceeds on rent, utilities, and mortgage interest. You can now apply for a second draw PPP loan as long as you qualify under the criteria. If you have 300 employees and less, or if you have received PPP-1 funding, you have spent the money or plan to, and if you have had a 25% reduction in gross receipts for any one calendar quarter in 2020 when compared to the same calendar quarter in 2019. For most businesses that apply, you're eligible to receive up to 2.5 times your monthly average payroll costs, up to $2 million. For some industries, such as hotels and restaurants, you're eligible up to 3.5 times your monthly average payroll costs. The SBA has also made some other changes to prioritize our smallest businesses by opening applications to them first and expanding the eligibility requirements to be more inclusive. For book or gap purposes, the PPP loan proceeds are typically treated as debt under ASC 470. When the loan is legally forgiven, the loan proceeds are then recognized as income or forgiveness of debt. You can also elect to treat the loan proceeds as a grant and recognize it as income concurrently as the covered expenses are incurred. However, I recommend that you talk to your CPA if you'd like to elect that treatment. For tax purposes, the loan proceeds are treated as non-taxable income in the year received as long as those proceeds are expected to be forgiven. The Consolidation Appropriations Act of 2021 was signed into effect on December 27, 2020, and it allows for the full deduction of eligible expenses that are expected to be forgiven for federal purposes. For California, we are still waiting on confirmation from our legislative officials, but the new proposed California agreement will allow companies who receive PPP loans to deduct up to $150,000 in expenses paid for by those PPP funds. If you have any further questions, please reach out. We're happy to help anytime.